Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this is for Monday evening, the 17th of October, 2022, and the time right now, 6:50 p.m. Central Time. Well, what a battle there is going on in the stock market. The news waves via, obviously, CNBC and watching Bloomberg, talking at great length today, a bunch of traders, why this market is headed sharply higher in stocks. And the bears, very quiet today, but those that were interviewed, no, this is a bear market rally, another one of them. You get them. This is typical of it. I'm still in that camp, by the way. And the reason is I get where the market rallied from. We went back down. We challenged the June lows in just about all the indices. You went through them a little bit. I don't consider going through them by a couple of percentage points very much, folks. You're still down 23% or whatever coming in today to the markets on the key indices. It's a bear market rally until it's got more. I listened to the bulls, and to a person, the market CPI is going to be falling. The word is going to be falling because we haven't seen it fallen yet. And certainly you can't argue that the core CPI has fallen. It hasn't. I mean, you may know something none of the rest of us do, but it hasn't. I'm watching how they're talking, how corporate earnings. I was watching a gentleman from Cantor Fitzgerald today giving a huge argument. They gave him a tremendous amount of time on CNBC about his bullish arguments. Well, he either made or he broke his career. They gave him that much time. If he's right, he made a great market call. If he's wrong, you don't come out of this real simple. You go on, you stick your neck out that country mile, be careful, okay, because you've stuck it off and many more people get it knocked off than not. But his argument was that the corporate earnings are going to come in very strong. They're going to beat the expectations. 10% or so of the companies have reported as of today, and that is not the case. But there's 90% to go. So his argument still has validity to it. He thinks, I'm just giving you what another thought process, that December will be the last rate cut. I certainly am not in that camp, all right? Why? The Fed has told you, and all the members have given you their dot plots. I don't see anybody stopping in December. So this is what bothers me. You get this type of thinking and the public latches onto it for the moment. And if they're right, you got a home run trade because you bought a bottom. Number one, who cares if you buy a bottom? If it's a prolonged market, if it's a bull market, it's going to last a long time. If it's a bear market, you're looking to sell rallies because you're in a bear market right now. So to me, I'm not in his school of thought. I don't see inflation falling with energy. I know you do. I don't. I'm talking to that gentleman. Natural gas is doing that. I was bothered today dramatically with bonds and notes. Let's take the 10-year note. Did you watch it go up in the futures almost 1.5 points? It gave it all up at the end of the day, and then it closed lower. We'll get to that in a minute. That's not what bull markets are going to be made of. That means interest rates aren't dropping. And the dollar. The dollar fell back today, okay, but nothing's matching up here. I think today was still short covering from last week. When you look at this weekly area chart, this is the argument that you live with. Here's your old low. The market came down, made the lower lows. You're in a zone. You could easily get a rally. Could it carry to 3,900 even? It could. Do I think it will? No. Why? Because you've got another Fed rate hike on November 2nd coming at you. So you have 2 weeks to get this thing going, just like they did last time. And by the end of this week, beginning of next week, some of the reality starts coming back into play. But we'll also have more corporate earnings, so you'll be able to have a better picture there. When we come on to the daily bar chart, I think you'd agree we got a distribution area. You stuck your neck out under these lows, but you came back. The pattern is one temporarily of what? Well, you can make an argument higher lows, higher highs right there, and right into the 18-day average where so often this is where the battleground is fought. It's been fought that way from here, 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 and here. So if you don't even have to agree with me. You can't disagree that that's been the case. Now, Each of these times, the question is, can the market stay up? Well, the odds don't favor it tomorrow. You had a huge rally on a Monday. If you go to the Stock Traders Almanac and you read articles like that, big days on a Monday, I don't care if they're up or down, get reversals on a Tuesday in stocks often. I'm talking the stock indices. We'll see if that comes in. You don't forget that. Number two, let's assume it's going to have legs. When's the last time it hit the upper Bollinger Band? We have to go back together into August. Well, this is not August. This is the end of September. Now we're into the October timeframe. Be interesting if it hit it. If it does, I would say, the market is definitely searching for that bottom in a major way because it's reached the level it hasn't been able to do in over 2 months. I'm not saying it's going there. I'm saying it could. Number three, going for the bulls is momentum's up. So going home, I'm a chartist. Throw the name off. Higher lows, higher highs, bullish. Market is trading and closed over the 18-day average of closes, bullish, and momentum up. So until the market gets back under the lows of today, and those lows, let's see if I can get them in here. I can't, but it's going to be around 35, 88, 50. Bulls have control. Objective, probably the 3805, not 3806 area. That's the upper Bollinger Band, if they can get it going. Let's take the next chart. In the NASDAQ, do you disagree? You came in, you challenged the June lows again. That's what the market ended up doing. You came back to the 18-day average. It's the same story, and you're fighting the battle there. So you have the trend up, the bias down, and you're correcting just the way you did in the S&P, an oversold condition. If I come back to the S&P, you got oversold. You're correcting that condition as well. So what about the Dow? This is where the strength of the market is. 30 stocks. I think one was down in it today, Walmart. All the others were basically higher, and you're up to the upper band and you're overbought. But that's a bullish story, okay? It's the first time you've gotten up to this zone. You haven't done that since, again, back in the August time frame, but it's more sideways action than it is true bullish action yet. On the other hand, until this low of 29,620 is taken out, who's in control of the market? The bulls. So chartists cannot walk in and be a chartist if they have a preconceived idea that it's bearish, it's bullish. I'm calling it a bear market rally because obviously the weekly charts haven't made this turn, but the dailies have turned, and especially in this market, until you take that out, the bulls grab control, although you're overbought as can be already into the upper band. In the Russell, the battleground X today, let's go back here. Let me see if it'll let me. It's not going to, unfortunately. I wish I had done something else. It's fighting its battle at the 18-day average of closes. Last week, the big rally Thursday, the drop back on Friday, as you can see. So you get the big drop Thursday, the rally's back, but it's been wild. I wrote tonight about the percentage moves that we're getting in the stock indices, because that's important too. We're getting in a lot of them 2.5% moves in a day. A lot of them. Up and down. Okay, that doesn't mean too much other than there's a lot of volatility right here in front of the FOMC meeting, and there weren't very many reports to come out today. A report that did come out was the New York Fed report, and it showed how its region's doing, and everything is slowing down, exactly what the Fed wants to see. When you come to the VIX cash, you didn't bust anything here. You fell back to neutrality at the 18-day average after fighting its battle at that all-important Bollinger Band. Please learn how to work with Bollinger Bands. They're so helpful, so helpful. And now the market's pulled back here, and it's looking for direction. Right now, it's gotten lower and low, higher high. Nobody's reaching for that insurance. In the bond market, does this look to you like a market that is in any manner bottomed out? Remember, if you don't bottom in these markets, it means interest rates are going up. Do you honestly think the stock market can rally in the face of higher and higher interest rates? If you do as a fundamentalist, God bless you. I can't imagine it. But again, I'm a chartist. And as a chartist, it's really not a pattern. It's got downside bias. It might embed over the next day or two. It's unable to get over the 18-day average and has not been able to do so since August. The 10-year note's a total failure today. As you can see, it fell apart. And as it fell apart, it's keeping itself oversold, but momentum is still to the downside and trend is there. You have to get back over that 111.10 zone in order to say, hey, something else is brewing. The dollar's void of doing anything. It didn't make it to the last Bollinger Band high. Momentum is flat. You're wavering like that. But you're wavering as interest rates aren't falling. If the interest rates are going to rise again, then this break in the dollar is probably very short-lived. It's a market that's just going to have to go sideways. It's a hard market right now because you're not trending. In the euro, it's the flip-flop. You got a higher high and a lower low. Momentum is flat, void of a trend, just the flip-flop of the dollar. But remember, 40% of the dollar index is weighted by the euro currency. So it's heavily weighted with whatever this does. They're the flip-flops of each other. What helped the stock market today was the fact that we saw Chancellor of the Exchequer, Jeremy Hunt in the UK, come out and do a rescue, a smart rescue, a bright rescue. He basically cut off the legs of mistrust, I'm sure with her opinion. Everything she had brought up 3 and 4 weeks ago and what she ran on has been thrown out the window. I mean, I heard her today speak and she says, no, that isn't true. We still have some protection in place for energy prices. I do applaud that. They do. And that will run until April. But all the tax cuts, all the growth plans, that's gone. And what Mr. Hunt did, and again, with her permission, is they reversed course and they put back into the economy, in theory, 32 billion pounds. I think it's pounds a year. I don't know if it was quoted dollars or pounds, to be honest with you. They're right in that general zone. Well, that offered the market a lot of security. The Bank of England announced they're going back to running down their balance sheet. They're going to start selling off the corporate debt that they had bought. The market likes that. Things are getting back to normal. What isn't back to normal is she's the most unpopular new prime minister, according to the polls, of all time. No one that I can see, both parties seem to have very much confidence in her, which means at best the government's on very shaky steed. Can she last another 2 weeks? There were calls today, as I wrote about, for her to step down. Watch Parliament TV, just like it's spelled. I watch it all the time, and my gosh, the calls there were unbelievable for what's going on. She didn't even appear today in front of Parliament. She sent a speaker for her. She would have been just crucified there. So whatever their reasons, I think you're looking at borrowed time. I don't trust what the pound will do under that. That doesn't mean they won't get somebody that might get everybody behind it, and it could end up better. I don't know. In Bitcoin, does this look to you like you're doing much of anything? I would say this is the making of something. When markets go sideways and narrow in like that, they don't stay like that very long. This is either the making of an important bottom or a top. The way it breaks out of here is going to be what you want to go with. What I keep watching in the news is interesting. People are talking about the maturity of Bitcoin because the volatility has come out of it. I guess that's one way to look at it. I can't argue that. It might be a very good way. Right now, the trend is up. The bias is up because you're over the 18-day average. Momentum is pointing up. So the bulls are probably buying in the 19,393 zone. They don't want to see the market under, as I see it. It looks like, what is that, 19,095? And if they can get a rally going, maybe they can get it back up to the 20,200 zone. That's the thinking. Take out that 19,095 and it just means you're going to stay spinning in this. What do I think when I see markets do this? I tell my traders to run away from it. Why? You rarely come out with a good feel of the market. Generally burns traders. Here's the differential between Brent and WTI. It's widening out again, and this is D's. Now, I've moved all my charts to December. So in the Brent, you're running on the D's, but you didn't get under the 18-day average. Basically, I have to say that the market's been correcting from hitting, I'm going to repeat this, the upper Bollinger Band with a major average, the 100 in the green, fell back, fought for 4 days at the 200-day average. See that right through there? Slipping back towards the 18. This is not a bear pattern yet. If the market closes under 90.68, it could be. That would give you downside bias, momentum down, trend down. But you got to prove it can do that. When we go to WTI, the December contract, same identical thing. You got up, you fought your first battle for 2 days here at the 200-day average in the upper band, reached up to the, as it turns out, the 100-day average. It was too much. On the way down, you stopped temporarily here. You challenged the high the day after, and now you're back to the 18-day average. These markets are looking for direction right now. If the stock markets of the world, and especially the U.S., the first one coming out, are turning up right now, I would think that'd be bullish for this market, not bearish. Something to think about. Heating oil. I'm looking to see, do we get an embedded reading? You don't have it so far. Embedded means you've taken the slow stochastic, and both the K and the D line, which are the red and the blue line, are going sideways over 80. You get one day where it gets over 80, both numbers, then the next day one of the numbers slips back under. You're staying overbought. However, cold weather's here. 237 million Americans are now experiencing temperatures right now that are unusually cold. That's a big number in America. Think of the swath all the way down south. We had snow, flurries, in Chicago area. That's unusual for us in this early in October. And today, I went outside. It was like 40 degrees early in the day. That's pretty cold. So not the nicest thing. In the suburbs, it was in the 30s. So we're already there. The question is what happens with that. And nat gas is getting crushed. That's the right word, crushed. Oversold, downtrend. It rode the 200-day average for the past, let's call it the past 5 days. And now it just went to the Bollinger Band again. People are throwing in the towel. I read that there's 35 ships circling Spain looking to unload natural gas. Why Spain? It's got the most ports, the liquid natural gas ports of any of the European countries. They could only take 6 this week. Those ships won't hang there. Costs too much money. They got to find other ports, or they may even have to go somewhere in Asia. China today said they are not going to export any natural gas for a while. They want to make sure they have enough for their home needs. So that came off. Yet you're looking at prices fall. Maybe we can't get our natural gas out fast enough is the biggest problem. Either way, it's a bearish market. Do I ever tell traders to sell under a Bollinger Band? No. So you hear all this talk about Bollinger Bands. Do you know how to work with them? It's really easy. I created a 13-video course, 13 chapters of videos. They're short. They will teach you how to do it exactly as I do it, how to make all your modifications, work with it, and recognize what you've got. Do I think it'll change your trading style? I do. Do I think it'll stick with you? I do. Do I think it's something you haven't seen? I do. Take a look. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, If you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.